Hi guys, welcome to this Money Control live stream. It's Thursday morning and the cues coming out of global markets are fairly mixed. You saw Wall Street clocking mixed close. Asian markets also largely mixed, but the GIFT Nifty is hinting at a good start for our market. So yesterday, of course, it was a pause after a 14-day winning streak, which is the best on record. But today looks like we are going to resume that up move on the Nifty and the Sensex, in today's session. Of course, lots of stocks in focus. We'll have a big market voice joining in shortly, Andrew Holland. He'll be sharing his thoughts on the market and what he expects from the Fed this time around, and of course all the sectors to watch out for. And all your stock related queries will also be in focus. If you have any queries, as usual, keep them coming in on a live feed and we'll try and take them up. But of course, before we move any further, let's take a look at the top stories at this hour very quickly. S&P 500 and Nasdaq book back-to-back losses while the Dow ekes out a minor gain ahead of key employment reports over the next 2 days. Asian markets trade largely higher while the GIFT Nifty is suggesting a positive start for the Indian market. Crude prices slipped from 9-month lows. In fact, further from 9-month lows, Brent hit $72 a barrel as demand concerns persist. Meanwhile, gold loses luster as it hits a 2-week low on concerns over the quantum of a Fed rate cut later this month. Reliance becomes the sole successful bidder to set up advanced chemistry cell manufacturing facilities of 10 gigawatt-hour capacity under the battery PLI scheme. The company's board will mull a 1:1 bonus issue later today. And among other stocks to watch out for today, Raymond's lifestyle business is set to list on the exchanges. Sona BLW eyes a 2,400 crore rupee QIP, while the government is likely to exercise the oversubscription option in the GIC OFS. All right, just about 7 minutes to go for the opening bell. The Nifty, of course, did snap a 14-day gaining streak, tracking global cues yesterday. But we did manage to stage a very good recovery from intraday lows. In fact, the broader end of the markets, recouped most of the losses to end marginally in the red. Of course, paint companies were the big gainers yesterday, tracking the fall in crude prices. PSU banks, were the top sectoral laggards, given the fact that Morgan Stanley has cut target price on some of these large PSU names like SBI, Bank of Baroda, PNB, Bank of India and Canara Bank. IT stocks, of course, slipped given the fact that we saw Nvidia shave off 10% in the session on Tuesday night, and of course IT stocks reacting to that. PCR, the Nifty put call ratio fell to 1.08 from 1.2 in the previous session. Stocks in F&O ban, new entrant RBL Bank, but what continues to remain in F&O ban are the likes of AB Fashion, Aditya Birla Fashion, Balrampur Chini as well as Hindustan Copper. Both FIIs and DIIs were net buyers in yesterday's session. Of course, let's quickly take stock of the technical setup. Then joining me is Brijesh Ale, who's from IDBI Capital Markets and Securities. Brijesh, great to have you on the show here. Looks like we are poised to resume the up move. So on the higher side, what kind of levels should one be watching out for today? 25,200, we are around about that level. But do you expect 25,300, 350 to be the resistance level for today, going forward?
Hi, morning, Nandita. So, my view on the market is positive, and my understanding is that we are going to see this today being a weekly expiry for the Nifty. 25,300 plus should what I'm looking for the close for today's session, and gradually over and above, I think 25,500, 25,600, that should be the immediate upside over the next couple of days. So bias is positive. On the way down, 25,000 is a major support. So it's a range bound kind of a market, and yesterday whatever the corrections we saw, I believe we have tested the support zone and now we are poised for the bounce back. Looking at the GIFT Nifty, even yesterday's close indicated that there can be some positive momentum. I'm not pretty confident 25,350, but then today for the weekly close expiry, 25,300 is what I'm expecting on a closing basis.
We'll talk about banks in a bit, but I want to get in your thoughts on the Reliance Industries, given the fact that, of course, the company's board will be mulling a 1:1 bonus issue. And of course, there is a news flow that the company, in fact, will be setting up a 10 gigawatt per hour battery plant under the PLI Advanced Chemistry Cell Scheme. The stock has been holding out in the positive. In fact, I think yesterday the stock was, in the in fact, in the pre-open, it's hinting at a positive start. Let's look at it that way. 3,000, that level holds on the charts. But going forward, in terms of resistance or in terms of levels on the higher side, what would you watch out for here?
See, Reliance, there was a breakdown during the 19th of July, and there has been a gap at 3,100 level. So, and even at 3,100, there are the writers who are just shorted their positions. So, slight resistance will be followed at 3,100 mark. The trend and momentum will turn positive only when 3,100 level is taken out. So, right now, from the current level, we can play for 3,100 mark. Only a strong closing above 3,100 will trigger the further positive bias. But then definitely from the current level, 50, 60 points kind of a move can be seen at Reliance.
Okay, that's the view on Reliance Industries. But another stock that's in focus is Sona BLW. Saw a good up move yesterday. Of course, it is in talks to buy out the rail engineering business of Escorts Kubota, for which it is looking to raise as much as 2,400 crore rupees via a QIP. 750 is where it's at, showing a good up move over the last 5 sessions. 764, that's the 52-week high, just about rubbing shoulders with that level. Should one trade into it today?
Yeah, I think the structure for the Sona BLW is positive, and if you see from the last couple of months, it has been recovering. And right now, what technically I can say, the all-time high level of 840, which was long back ago, I think that level can be retested. So this current momentum can last till 840 levels. So that definitely there is some exposure is there, and there is an opportunity is there. Somebody wants to take the long trade should definitely take it. The precise stop loss would be 675. That is the support level from where it has started on an immediate basis. I think with that stop, somebody was to play for 840 level. I think that's an opportunity in Sona BLW.
Okay, that's the view on Sona BLW. But very quickly, before we head into the opening bell, Suzlon Energy. Now, this stock has been under pressure of late. There is news flow that the company has sold its corporate headquarter in a 440 crore rupee sale leaseback deal. One of property will be leased back to the company for 5 years, and the sale of property is a part of the broader strategy to focus on core manufacturing activities. The stock, in fact, is down 12% from its one-year high. Should this dip that we are seeing in the stock prices, utilized to take position in the stock, should it be seen as a positional play now?
I think one should wait for a little while. The further correction is somewhere close to 68 to 70 levels. So that dip is expected in this Suzlon maybe over the period of time. So once close to 70 level, or maybe 65 to 70 is the precise level from the technical point of view. That level is seen, then I think we can take the positional bet. Right now there is still a distribution is going on. So still maybe after some sideways kind of a trade, there is a possibility we might see some further correction. So one has to wait till 70, close to 70 to 68. That would be the exact buying range. And I'm pretty confident sooner or later we might see those levels. So I would wait for those levels, and then I would take the long trades.
Okay, that's the view on Suzlon. I think we had a query also on our feed. Hope that answers your query in some way. But let's take a look at the market open then. It is a positive start as was being expected, in line with what the GIFT Nifty was doing. 25,250. We are around that level, just about 0.2% kind of gain coming in on the index. The mid-cap index is showing good traction, almost 0.4% kind of a gain there. The bank Nifty also has opened in the green. We'll have to see whether or not it manages to hold on, to the positive territory or not. Yesterday as well, we saw the Nifty bank index, come off the day's low, and that's a good thing. So today we are picking up traction where we left off. But in terms of other sectors, just want to see what the other sectors are doing. Most of them are in the green. Pharma has taken a backseat today. Remember, Pharma and FMCG were the two pockets that did well yesterday. Today, some bit of profit taking on the Pharma pack. But what's doing well is energy pack. You have autos, in the green. You have metals. They have staged a good rebound of 0.5% yesterday. The metals pack was also under pressure. Aside of that, if you look at the individual movers, then let's quickly take stock of that before bringing on board our big market voice for the day. Cement stocks were doing well yesterday and today as well, extending gains. Ultratech Cement is the top Nifty gainer as we speak. Hindalco, Tata Steel, these are some of the counters, metal counters doing well. As I mentioned, the metal pack is up 0.5% or thereabouts. LTI Mindtree from the IT pack doing well. Wipro as well doing well, and some of the private banking names that were under pressure yesterday have staged a good comeback. So ICICI Bank, HDFC Bank, all of these counters, although they were off lows yesterday, today gaining traction. On the losing end, you have the likes of Britannia, Bharti Airtel, Nestle, Cipla, Sun Pharma. So all these pharma and FMCG names that were witnessing buying interest yesterday have come under some bit of pressure. But looking at the market texture right now, we are in the green, marginally so, but hopefully we will continue on this path of positivity today, and looks like we are poised for some bit of gains today. But on that note, let me bring on board our guest for today. Joining me is Andrew Holland, who's the CEO at Avendus Capital Public Markets Alternate Strategies. Andrew, I hope you're doing well. Speaking to you after a long time. What are you making of the global market turbulence? What happened day before yesterday was reminiscent of the August 5th sell-off on Wall Street. Would you once again call it a knee-jerk reaction, to some weak data points, or would you say fears of a US recession are justified?
Well, first of all, good morning, Nandita, and thank you for the opportunity. Yeah, I think the market's still trying to understand where the Fed is heading, and it's getting nervous. There's two schools of thought. First of all, the base case is 25 basis points in September 18th in terms of interest rate cuts by the Federal Reserve, with a narrative that has to be dovish that we'll do more throughout the back end of the year, because the market's baking in around about 100 basis points of cuts before the end of 2024. If it fails on any of that, then the market will obviously take it very badly. I think that the market would like this. They would like to see a 50 basis points cut, with the narrative being that incrementally we'll continue to look at data and what the trend is down, which is what he said at Jackson Hole. So that's where we are. And I think if we get that kind of narrative, then the markets can probably hold where they are. But the risk downside is quite high if it just does 25 basis points, but data is showing that the economy is slowing. So what the market doesn't want is a Fed who's behind the curve again. So they'd like to see some front ending in terms of interest rate cuts, and then they can hold a little bit more longer if the data is not showing, but at least front end the rate cut this time around.
But for this year itself, for 2024, would you be expecting a three rate cuts, or would you say that 2 rate cuts of 50 basis points would suffice? What is the quantum of rate cut that you would be looking out for the rest of the year?
I think it has to be a minimum of, let's say it does 25 in this month. There has to be at least another 50 to 75 before the end of the year. So, and that's what the market will worry about, is that he'll be chasing interest rate reductions, if the economy is slowing, and that's what the fear is. But let's just take that forward slightly, Nandita, is that what would the RBI do? I think if it's 25 basis points, I think the RBI will be on hold in October and say, we can wait and see. We've got the elections coming up in the US. Let's think about December. If it's 50 basis points, it does give the RBI that kind of wiggle room to reduce rates a little bit in October, because the economy is slowing here. We can see it. We're seeing GDP forecasts being lowered on a not a daily basis, but quite aggressively by a number of the brokers. So that's a concern going forward.
Right. Let's talk about the Indian markets then. We are coming off the longest winning streak on record for the Nifty, right? A 14-day winning streak is what we saw. Since the elections, we've climbed quite a few walls of worry, right? So what are the chances, according to you, of a 5 to 10% kind of a correction here on? Till now, we've seen all the dips getting bought into. Would any weakness now lead to only underperforming sectors playing catch up, or would you still go ahead and say that a 10% kind of correction, is something that we can look at for the Indian markets?
See, a 5 to 10% correction, Andy, would probably mean that something else has happened globally, to upset markets because, given the wall of domestic flows into the market, it's unlikely that you're going to see that fall unless there's something more significant, either locally, but more likely overseas. So, and even then, let's say if markets fell in the US by 5-10%, I think we'd probably fall half of that. So it would take some big event for us to fall 10%. But I would say that I think the upside is pretty capped at the moment. There's no real massive catalyst to get this market higher because earnings are being downgraded. And as I said, if growth is slowing, that's likely to continue with some more downgrades going into the second quarter, third quarter earnings for India Inc. So that would be where if consolidation is probably the best I could think of here.
Right, let's break it down to sectors then, Andrew. What are your thoughts on banks? Private banks are still, lagging, so to say. And yesterday, of course, Morgan Stanley came out with a report where they said that it's time to be selective when it comes to banks and stick to only large private sector banks. So would you say that it's time to switch from PSU banks and look at some of these names? I mean, I know you don't talk stock specific, but is it time to stick to the biggies like HDFC Bank, Kotak Bank, ICICI Bank? So these are the stocks to stay invested in the banking pack.
Yeah, we've had many false dawns in this private banks revival in terms of share prices, Nandita, that's for sure. I think the problem remains that NIMs remain under pressure. There's again no real catalyst in terms of getting these stocks moving. The best that could be said is if obviously if interest rates are coming down, that's good for the bond holdings of these banks. So you get MTM kind of gains, and obviously then NIMS pressure might become less going forward. But then you've got to say, is the economy? We say the economy is slowing. What's the catalyst then for it to start to pick up again? We've got to see that private capex along with government capex start to pick up very, very quickly in the next few months. To get that kind of multiplier effect and the private capex cycle really kind of taking off. So I think it would be a relief for the banks. But I'm just not seeing the catalyst to get the banking sector going apart from lower interest rates. So it's whether you're taking a bet on October or December for the Reserve Bank of India. I think the 18th of September will give us that clue. But what I was saying, tactical, I'm talking about very short term now in terms of tactical. The banking sector might have that rise on the back of expectations of interest rates coming down in October with a surprise rate cut by the RBI.
All right. Another pocket that's been garnering a lot of attention is the defense pack once again, right? They are once again on the radar. The government giving the green light for acquisitions worth almost 1.5 lakh crores, right? Some of these stocks have actually come off 15 to 20% from their record levels, right? So do you think it's an opportune time to look at defense stocks once again, or do you think they're still expensive, even though the runway for gains is getting broader here on?
See, I think with defense stocks, it's all about the order books and receiving those orders. Now, typically, you can't really kind of gauge when those orders will be given because obviously they're more sensitive in terms of what the orders would be from the government. But there's one thing for sure, Nandita, is that the government around the world and including India are going to continue to spend on defense, and India is going to see that. For multi years in terms of ordering. So what I would say is that once the orders start to come through, then you'll start to see these defense stocks continue to rally higher, and probably because if you then project those earnings going forward, probably starts to justify some of the ratings that we're seeing after the correction. And that will be the same for industrials as well. I mean, the government hasn't been awarding so many contracts recently. Once that starts, then industrials and the likes of the kind of L&Ts and BH of this world will be receiving new orders from the government.
All right. I know just about a couple of more questions then. At this time when we are at levels that, we've never seen before, which are the themes that continue to excite you, Andrew? And which do you think still offer some bit of valuation comfort?
So there's 2 to 3 big themes, Nandita. We talked about these before. One is premiumization within the beverage industry, whether it's alcohol or non-alcoholic drinks. That's not going to change. I think our travel habits in terms of experiences, within India, that's not going to change. So airlines and hotels, continue to be a big theme. And of course, the electronic manufacturing sector, which is, if you're an aeroplane, you probably just come out of the hangar, you haven't hit the runway yet. So there's a lot more to go for this sector. There's going to be up and downs in the sector. It reminds me of, when the telecom sector started, you had all those expectations. There's a few faltering times, but at the end of the day, you can see where the sector is in terms of the telecom sector today. And that's where I think that the electronic manufacturing sector will be over the next 3 to 5 years. And there'll be a number of players who will benefit from this. And I think those of which are listed, will continue to see very, very strong growth over the next 3 to 5 years.
Right. Last question really. From here on, do you think one should temper the expectations or return expectations from the Indian market? Because we are already at, 25,300, 400 kind of levels. Would you expect us to end the year around 26,000, or do you think that's being a bit lofty in terms of expectations?
So, Nandita, my rule of thumb is that, the market should, kind of run up in line with earnings growth. Now, my earnings growth for this year is 15%. And that's a bit under pressure at the moment. But let's just keep with the fact that it's 15%. The market is already up since April the 1st, 12%. So there's an extra 3% between now and the end of March of next year. My feeling is that the risk is to the downside, not to the upside. So maybe those gains that we've seen already it means that the best of the market gains are behind us. And really, it's going to be more of the themes that work for you, an individual stock picking that works for you rather than the index.
All right, that's the view then. Andrew Holland there. Thanks a lot, Andrew, for taking out time and joining in. It's always a pleasure chatting with you, and I look forward to our next interaction as well.
Me too, Nandita. Thank you very much for the opportunity.
Thank you. Well, with that, let's shift our focus back to the market and see what we are doing at the current juncture. We flattened out a bit, just about holding on to that 25,200 mark. But the mid caps have gained traction, and the mid cap index is up by 0.5% or thereabouts, and the Nifty Bank index is also, above that 51,500 mark, which, by the way, was being seen as a crucial support zone for the Nifty Bank index. But Brijesh is still around with us. Brijesh, CCL products, one stock that I really want your thoughts on. Yesterday, it saw a 15% uptick. How would you really trade into that counter? Would you say it's time to book some bit of profit there?
Yeah, so the CCL, there has been an extended move, and I think with the news what we saw in CCL, it is wise to take some profit books, to take the profit at current level, because this 850, 860 is the resistance zone, and today, sooner or later, there can be some small profit booking can be seen. So somebody is having a position should take that, because on the way down, it might come back to 750 levels over the next couple of days. So it is so fresh buying should be avoided, and somebody has a position to should book profits.
Okay, book profit. That's the call on CCL products. Before I move on to our queries, what's the call on a GIC? The government is exercising the green shoe option. OFS has seen good response today. It's open for retail investors as well. The stock is in news. GIC, how would you trade into that? It's trading just a shade under that 400 level. Is it time to look at this stock in the insurance space?
Still, yeah, I understand that, but then still this is in that range. Even irrespective of that, the stock has not given any strong breakout. The volumes are missing. So I think 380 is a very strong demand zone, multiple support level. So I would be watching those points, but right now there is no trigger from the technical perspective. So adding fresh longs, there is no theme at currently, but the support for the stock is seen at 380 mark.
Okay, that's a view on a GIC. Then let's shift focus on some of the queries that we are getting this morning. Just want to take up a query on one of the IT stocks, then Happiest Minds. Vignesh has written in, he wants to know whether it's the right time to average with the target price of 950 on the stock. Would you advise?
Uh, Yeah, I think the averaging can be done, but the trigger will only follow when it crosses 835 level, which is the 50-day moving average. So it is in downtrend, but there is a limited risk. The 750 is a demand zone. So I think, but it will take a good amount of time. Right now, even though when the IT stocks are moving, this has not performed. It is not outperformed. It's in a downtrend. So it will take a time, but then averaging can be one of the options which can be seen at current level.
Okay, that's the view on Happiest Minds. But CMS Info is another stock that I want your thoughts on. The stock hasn't done much in the last 5 sessions. In fact, even over the last 1 month, it has been fairly sideways. Query coming in from Satya wants to know your thoughts for a 12-month period. Should one add or hold for a 1,000 rupee target here? 1,000 rupee target means almost doubling of the stock. Would you expect that in the next 1 year?
See, from the charts from the daily and weekly, there has been a distribution and profit booking which is going on, and the support for the CMS is right now 520 level. So I think if somebody is having a position, should wait and watch and understand that whether this 520 level will be taken down or not. As of now, this 520 level is a demand zone. This was the exact level from previously the stock has started to take some support and perform. Right now, there is very clear-cut profit booking is going on, and I expect it to come at some 520 or maybe in a worst case scenario 500. So 500 is something where again re-entry can be done, but that is a wait and watch kind of a scenario. As of now, I am not confident whether we will be looking at the 1,000 mark on the higher side. Let it come down on the downside. A small correction is due, so maybe some 5-6% correction. But closer to 500, if somebody wants to take the fresh longs, that can be viewed.
Okay, that's the call on a CMS Info Systems. Hope that answers your query. Query coming in on Zomato, given the fact that we have a JP Morgan report on this stock where they have hiked the target price significantly from 208 rupees to 340 rupees. That's the kind of target increase we've seen from JP Morgan on Zomato. The stock was under some bit of pressure in the recent past, but today it's up somewhere around 5% or thereabouts. And Utsav Jain wants to know your thoughts on this stock. Is this a renewed up move? Because it had come under some bit of pressure off late. 5% almost higher, today 253. Would you expect higher levels in the next 1 week or so?
Yeah. My view on this Zomato would be positive, and whatever the corrections we saw recently has done with whatever the retracement has to be done, and it has met with support of the 50-day moving average, and I think it is slowly recovering from this point. I think in the near term we can see another 50 odd points of move on the higher side. So view is positive. Maybe 300 is what I'm looking at. Maybe over the couple of months, but view remains positive and very limited downside from the current level. 250 to 245 is a very strong demand zone.
Okay, that's the view on Zomato. Hope that answers your query. The next one's coming in from Abhishek Singha, wants to know your thoughts on IRFC for a 1-year time horizon. Some of these railway stocks have been chugging along, no big up moves. IRFC has been sideways to say the least in the last 1 month, under 200 rupees now. But how do the long-term charts stack up now for some of these railway names, especially IRFC?
So basically the trend is positive, but on an immediate basis, there is another 10-15 points of odd correction is due. So I'm not very clear where it will settle, but then on an extreme scenario, 150, 155 is what I'm looking at into the IRFC. So slightly negative bias from the immediate time frame. So whenever it comes close to 160, 155 level, I think that's again the very strong demand zone, where again the long-term charts will look pretty positive. So one has to wait for that. Right now, there is a profit booking which is going on, which can drag it another 10-15 points lower from the current level. So immediate basis it is negatively placed, and closer to 150, 155, one can take the long-term bets.
All right, that's the view on IRFC and some of the railway stocks. So that answers your query. The last query really for the day coming in from Kartikeya Singh wants to know your thoughts on JG Chemicals. Now, he's sitting on a 70% profit in the last 3 months. He wants to know whether he should book profits or he can average at current levels. The stock has done phenomenally well. In the last 1 month, it has rallied over 50%. Would you advise booking profit, or would you say use dips to average out?
I don't track this, but then purely from the technical perspective, I think it's whatever we are seeing in an extended move, and technically it suggests there can be a profit booking which can take the stock below 400 mark. So it is wise to take the 50% profit at this level, and if you have some very long term view, then one can hold it. But from if there is it is a trading and a short term bet, then one has to take the profit and then wait for the corrections, and so that we can review it further.
Okay, then one more query. This one is coming in from Jeet. Wants to know your thoughts on a Tata Tech. The stock is holding out above 1000 levels. Of course, it's not been a very long time since it listed, but with whatever data you have, any thoughts on where Tata Tech is headed from here?
Right now, it looks with the last 3-4 days of a trading, there has been volume in the support zone. So it looks like the 1100 which is the immediate resistance. It looks that can be taken out, and gradually the selling came from the level of 1280, 1300. So we can expect a pullback. Time frame would be difficult to justify, but then once it crosses the 1100 mark, there can be 100, 150 points kind of bounce can be there. There's a high probability that we might see this bounce in Tata Tech.
Okay, that's the view on Tata Tech. This wraps up our query segment for today. But Brijesh, what are your trading picks for today?
I'm liking the APL Limited, which is trading quite strong from the current level. I think we can see 1200, 1215 APL Limited. The stop loss for the trade will be 1130. And one more stock which is coming to radar is the MGL, Mahanagar Gas. It's quite strong. I'm expecting a range breakout in this particular stock. 1880 is the current price, so maybe it can go back to 1950 to 2000 during this month. And stop loss for the same would be 1800 level. And beside this, there's one more stock. This is Apollo. Tire, which is again moving up very strong at current level. So I think there is a 30-40 points kind of a rally we can expect in Apollo Tire. The stop loss will be for 490 levels.
All right, MGL and Apollo Tires, two trading picks from Brijesh. With that, Brijesh, would like to thank you for taking out time and joining in this morning. Look forward to our next interaction. Wish you a very happy trading day.
Thank you.
Well, with that, of course, we've come to the end of this edition of Opening Bell. Just want to see where the markets are at. Just about holding on to that 25,200 mark by the skin of its teeth. Just about 6 points higher on the Nifty. So we fizzled out from the opening highs. And the mid-cap index, although managing to show good traction, 0.5% gains coming in on the mid-cap index, and even the Nifty Bank index. Just about a shade below that 51,500 mark, but nevertheless holding out in the green. So texture is on the positive side, but we have almost come off from the opening high. So let's see where we really close for the day. Of course, with that, from me and the entire team, thanks a lot for tuning in. I'll be back at 3:30 p.m. with closing bell. So don't forget to tune in for that. But for now, it's a goodbye. Have a good day and come back and join in later.